So there's a lot of ways that you could use moving averages in trading. I like to use them in 3 different ways. Now, the first way that I'm going to use moving average is to gauge the overall strength of a trend. So if I'm watching, say, Tesla, and it's above its 50-day moving average, it's above its 21-day moving average, it's above its 10-day moving average, it's well above its 5-day moving average, then that's telling me that this is a very strong trending stock right now, right? Because it's above all of the moving averages. The moving averages are just telling you how strong a trend is. And so if price is holding above this moving average, then it's a strong trend. It works on stocks, works on Forex, works on crypto, works on anything that you can think of that trades and has a price chart. So that's the first way that I'm using it. The second way that I'm using moving averages is sometimes when you're looking at this price chart, you'll see that it'll start to rally and it'll come down and it'll bounce off of this moving average, right? So in those cases, it's acting as support. Now, it's not going to hold a moving average forever, but if a stock is in a very long-term uptrend, it could hold, say, a 10-week moving average for a very, very long time. Go back and look at the chart of Amazon from last year, even the year before, and you'll see how well it held the 10-week moving average for pretty much the entire way up. So if you are a longer term trader, or even if you are an intermediate term trader where you're going to hold for a period of several weeks, several months, you want to be paying attention to that 10-week moving average, especially because stocks will often get support at that moving average. And one of the reasons why is because that's the moving average that the big institutions, the hedge funds, mutual funds, pension funds of the world, that's the one that they're paying attention to, right? Like, so we're all kind of looking at the same stuff, but because they're moving around millions and billions of dollars, that they need to take a little bit longer of a time frame, right? Because it's not going to be as easy for them to move in and out of a position as it would be for you and me, unless if you're somebody that's also trading $1 billion. I'm not. If you are, fantastic. Let's chat. But for most of us, we're not trading billions of dollars, so we're able to move in quicker like this. But think of it like a cruise ship trying to turn in the middle of the ocean versus a speedboat, right? The speedboat's going to be able to turn on a dime, whereas it'll take the cruise ship much longer to make the same kind of a turn, right? So that's where these kind of moving averages come in. So pay attention to the 10-week line or even the 50-day moving average, even if you're used to trading on the lower time frames, because those spots tend to be very important. And the last way, the third way that I'm using moving averages is as a trailing stop, right? Because if price has been holding a certain moving average for a while and it's trending above it, and then all of a sudden it starts to dip and close below that moving average, that's a sign that the trend is changing, that it's lost some momentum. And so as it starts to lose momentum, then I start to scale out of that trade. I'm not making an all or none decision, but if, say, we're in a very strong trend and it starts to close below its 5 EMA, great, that's time for me to start taking just a little bit off, because now the trend has changed, right? It was holding the 5 EMA, not doing it anymore. Great, I want to trade with the trend, so I'm going to start to scale out a little bit. Same thing. Oh, fell a little bit below the 10 EMA, closed below it. Great, time to take a little bit more off, and so on and so forth. There's so many trades that we could be in the market. We should only focus on the ones that are working in our favor. That the way that I do that helps me stay with the dominant trends are by following these moving averages and then using them as sell signals to scale out of the position.